Okay, good morning. Today we are covering Chapter 1. We are going to go through the homework today, and we're going to do some questions, and we'll talk about what to do this weekend. And at the end of class, we have plenty of time for questions. So what I'm going to do, we're going to start with is Brian's going to come here. He's going to actually get in front of the camera, and he's going to talk. So you'll have to let me know online if you can hear him.
Okay, hello everyone. I'm Brian. I'm the treasurer of Beta Alpha Psi, an accounting fraternity here at Kent State. We wanted to invite all of you to our meetings every Thursday at 5 o'clock in BSA 215, so it's just right down the hall here. What we do is, in our meetings, we have professionals come and speak to us at every meeting. Tonight it's Chune and Tanicki, the accounting firm that I'm going to be working for. And then I think next week is either the IRS or the FBI coming in to talk. So they're really cool presentations. We hope you can come. It's a great way to get involved, meet new students, other accounting students just like yourself, if you're an accounting student. It is open to all finance and MIS majors as well too. So please come. There's free pizza, free pop. We try to help students get internships. Most of the internships we try to get you are going to be in accounting though. So please come. There's also officer positions. I know I went crazy through this PowerPoint, but there's officer positions available too. Once once you're involved in either the Accounting Association or Beta Alpha Psi. If you want more information, email Taylor Burney at tburney1@kent.edu. She'll get you hooked up. Thank you.
Okay, thank you, Brian. So if you are an accounting major or finance majors are welcome and CIS majors, I would urge you to go to this organization meeting if you can. It's our first meeting. You can go any week you want, 5 to 6:15. Excellent group, excellent way to get connected. So with that, that's our plug for the day. We'll be talking more throughout the semester about things that accounting students can do. But what we're going to do is we're going to start with a question. I'm going to pick a person at random to ask this question to. So the question is going to load. You're it. You're it. Okay. So are there assignments due in my county lab this Saturday?
Yes.
Yes, great. See? 100%. Okay. So there are assignments due this Saturday in my county lab. We will end class with a list of the assignments, so no worries there. But generally, this week, because it's the first week, we have a course intro quiz due that's over the syllabus and kind of what we talked about on Tuesday. And then we have an attendance quiz. And that attendance quiz becomes available at 5 o'clock today. It's due Saturday. And it's over the questions we do. This question here could be on it. I don't think it's on it. But any of the questions we do today, that one could have some syllabus stuff on it too. So those 2 quizzes are due this Saturday, and there's a homework due this Saturday. And we'll do the homework problems today in class. And when I say it's due Saturday, whenever I talk about it, that's at the end of Saturday. We are talking Eastern Standard Time. I usually just write 11 because I don't want to write 11:59, but I'll write 11. But it is at the end of the day, and so it's anytime Saturday, but it is Eastern Time. Okay, now a couple things. I know there's a couple people here who were not here Tuesday. Also, when you do these quizzes, your attendance quizzes are over questions we do in class. If you ever need, and the homework we do in class, if you ever need to refer back to class, class is recorded. We have this class at 9:15, we have the class at 11. It's in Collaborate and Blackboard. If you want to view it on your computer, you can view the recordings. It doesn't matter which one you view for a particular day. The 9:15 or 11, they'll be exactly the same. Or you can view the recordings on YouTube, and if you go to Blackboard in the left-hand side, there's a link for YouTube channel, and you will see, for example, if you were not here Tuesday, if you go to the left-hand link on Blackboard for YouTube channel, if you look at those videos, you'll see one that says first day of class, and you can watch it there. I typically only put one recording on YouTube per day. I don't put both of them. Okay, so there's that. Now, we have another question, so I'll find another person to ask. This question is going to appear in a minute here. So, since we talked earlier, let's ask. Okay, so when will the attendance quiz for the week be available by? This is quiz 2. B, Thursday by 5. Yes, exactly. So the attendance quiz for this week will be available by 5 p.m. Thursday. If you ever don't see it on Thursday, the first person to not see it could email me, and you don't know if you're the first person. But if you don't see it and it's 5 p.m., you can email me and ask me. I don't forget very often, but I guess that's possible. But we will have, I will tell you they will be available by 5. If I have them available earlier, I'll release it earlier. But that's what I'm promising you, is it'll be available by 5. Okay, and you will not see it in my accounting lab until it's available. Okay, so now, waiting for the answer here to appear. Okay, so next, one more, well, maybe one more, maybe there's 2 more, but another announcement. So we talked on Tuesday, the difference between sections in this class. There's an online section and there's a face-to-face section at 11, and there's an online section and a face-to-face section at 9:15. The only difference between all those sections is where you take the exam. If you are registered in Flashline for sections 1 or 2, so if you look in Flashline and you're in section 001 or 002, you will be taking your exams in the computer lab. Okay, so you will take them during proctor hours. Those exams are typically going to be available Tuesday, Wednesday, Thursday, typically proctor hours 9 a.m. to 9 p.m. I will harp on you to not wait till Thursday, because there can be long lines and you can have to wait in line and take a risk you can't get it in. So that's sections 1 or 2. If you're in sections 1 or 2, you take it in the computer lab. If you are in section 5 or 6, 005 or 006, you will take your exams online with ProctorU. ProctorU has a live person in the corner of your screen. They can see you through your webcam. You can talk to them. You can call them on the phone. So to me, that's some measure of security, that you know there's a person. You're not fighting with technology with no person. So if you're in section 5 or 6, you will need high-speed internet and a webcam to take your exam. You don't pick how you take your exam. How you're registered for the class dictates how you take your exam. There is no charge per exam if you're in section 5 or 6, as long as you register at least 72 hours in advance. If you want to take it on demand, if you're like, well, I want to take it at 4 p.m., like in an hour or something, there's like a $5 or $6 charge. But as long as you schedule 72 hours in advance, you're good. But the reason I bring this up is tomorrow around 3 p.m., you will no longer be able to change sections. All enrollment for all ACCT classes ends tomorrow at 3 o'clock, because you can't miss a week of class and expect to do well in the class, especially these early weeks. So your opportunity to change around sections ends around 3 o'clock tomorrow. So if you want to change sections, you need to do that today. Okay, that would be the best option. So go into Flashline. So whichever section you want, pick that. And let me know if you have any questions. There is a ProctorU link on Blackboard somewhere. You can poke around and look at it. I used ProctorU for my online sections last semester. It went very well. If I were taking the exam, absolutely, positively, hands down, I would do ProctorU. There would be no doubt in my mind. I could take it in the privacy of my own home. It's quiet. I can control the noise level. I don't have people walking in and out. If the idea of a person looking at you on your screen bugs you, just minimize the window after you've said hello to them, because they can still see you, so you just minimize it. And it just feels so much more convenient to me. So, but it is your choice, but you do need to make that choice today, or tomorrow at the latest, 3 o'clock tomorrow. After tomorrow, you're stuck with whatever section you're in. That is the only difference between all these sections. You can attend online, you can attend in person, you can attend the 9:15 class, the 11 o'clock class. And I do want to make one other mention, not particularly associated with that, but I do not take attendance in here. So in terms of getting attendance points, there are no attendance points. What we do have in here, we will have pop quizzes occasionally. We do not have a pop quiz this first week. That would be a nightmare. Okay? So no pop quizzes this week. But we will have pop quizzes in here. If you're in class for a pop quiz, you will be able to take it if you're online or in person. It doesn't matter, but you just have to be signed in with your full name or here in class physically. So, so don't let that worry you. Someone was asking, do we need the Collaborate app to attend class if we're here in person? No. You can absolutely positively be a traditional student. If you want to do that, that's absolutely fine. So you can, the Collaborate app is helpful in class. Sometimes, whenever I go to conferences, I'm going to digress for a minute. Whenever I go to conference, I'm the nerd holding up my iPad taking a picture of the PowerPoint or something because I don't want to write the notes. I'd rather just have a picture. So Collaborate app, what it allows you to do is do a screenshot, especially since we're doing questions in here that show up on the quizzes. That's a convenient way to take notes if you want to do that. So that's one argument for the Collaborate app. You can also play along and answer questions when we do those, but those aren't for credit. So if you want to be a traditional student in this class, absolutely welcome to do that. There's just other options that might make things more convenient if you want. Okay, so now going back to the slide I have up, we have a video quiz due. Quiz 3 is due Sunday, and those video quizzes are over the videos that are housed on Blackboard. These are not over what we do in class. These are the lectures. So this is where I'm lecturing about, here's this concept, blah, 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 blah. We'll do a little bit of that today because you haven't watched any of these. But those videos for the video lectures are found on Blackboard. You would click in the left-hand side where it says Unit 1, Unit 2, Unit 3. And once you click on Unit 1, then it's going to take you to a screen. You scroll down towards the bottom, and you'll see a list of the lectures. And this first video lectures are over Chapter 1, and you'll see a series of videos. And these videos are by learning objective. The video quiz is over those. And you would typically, lots of times, on the video quiz questions, it'll tell you what learning objective it is. Not all the time. Some of the questions end up being more comprehensive questions over the whole class, like what we've learned to date, but they're pretty major things. So those are available. The video lectures are housed there on Blackboard, and it does link out to YouTube, by the way. So these are YouTube videos, but they're linked on Blackboard. Okay. Okay, so now we're going to get into class. So this is just kind of a discussion point starter. This question, true, false, bookkeeping is the mechanical part of accounting. True or false? Now typically you would have watched the lectures and you would have some idea, but we're just going to do a guess here. So how about if you guess? True? Yes, you are right. See? Nothing to it. Okay. So bookkeeping is the mechanical part of accounting. We don't teach bookkeeping much in here. Typically, if you took accounting in high school, a lot of that focuses on bookkeeping. And so bookkeeping is the mechanical part of accounting. We don't focus much on it. It's a little piece. It's like how we're going to keep score in specific. Okay? So bookkeeping is the mechanical part of accounting. Okay, now another one. The two types of accounting are, now this one I'm going to jump in since a lot of times, see what normally happens is I'm going to walk around and take answers, but this would be unfair because you haven't watched, most of you have not watched the videos. Okay, the two types of accounting. We have financial accounting. That's this class. Financial accounting is geared towards external users. So financial accounting, when you pick up an annual report, or when you hear a news report that so whatever Apple company has piles and piles of cash or lots of income. That is based on financial accounting. Financial accounting is based on what we report to the outside world. The other major type of accounting is managerial. Managerial accounting is that branch where that's what we use inside our company to manage better, to make decisions. So managerial accounting is going to be involved with, should we make this new product? What's the break-even point? What does this product cost us? Those things are not publicly released. That's managerial accounting. So we have financial, which is this class. If you're a business major, the next class you take would be managerial. And so you have the external users in this class, the internal users, the management in the next class. And then we also, you'll hear about audit and tax. They're offshoots and they are kind of subsets of financial for the most part. Audit deals with checking to make sure things are done correctly and processes are followed. And tax, of course, is doing your taxes according to the tax code. So, but the biggies are financial and managerial, and that's what the classes you'll have will be on. Okay, so now we get into a little bit of lecture. This morning in my early class, someone pointed out it was a lot like exploring business, a lot of the stuff we covered today. Don't worry, we'll get past exploring business pretty rapidly. So the forms of business. Now, forms of business, you're going to watch video lectures this weekend over Chapter 1. And this is one of the things that those will focus on. So right now, I'm just going to tell you some highlights about what this is, and then we're going to do a homework problem. So I have to tell you a little bit of background here, and then we'll do a homework problem. So first of all, the forms of business, the details that I'm talking about now are in pages 5 and 6 of your textbook. Okay, pages 5 and 6 of your textbook cover proprietorships, partnerships, corporations, and then somewhere around corporation is a limited liability company, could be limited liability partnership as well. Okay, so start at the top. So if we start with proprietorship, typically we hear the words sole proprietor. Proprietorship means there's one owner. That owner has not incorporated, just decided, I'm going to start a business by myself. I'm going to hang out my shingle. I'm in business for myself. So the advantage to that form of business, very easy to do. Any of us could do it. We could just start business. We're a sole proprietor. We can do things however we want. We don't answer to shareholders. We don't have a partner. So that's great. The disadvantage to proprietorship, one of the big disadvantages, is that any creditor can go after my personal assets. So I could lose my house. I can lose, if I'm sued, there's no way to keep my personal assets out of the business in terms of legal liability. Okay, so that's sole proprietorship. Then we get down to partnership. And partnership is where 2 or more people go into business together. And 2 or more people go into business and they say, great, we're in business together, let's proceed. Partnership, it's nice because it can be fairly informal. It could be a handshake. That's not advisable. With a partnership, there's a couple disadvantages to partnership. First of all, partnership, your personal assets are at risk. You can't protect those. So if your business gets sued, your personal assets are at risk. Also, if a partner wants to leave the partnership is dissolved. The partnership does not have its own legal existence. So if a partner leaves or if a new partner joins, or if you want to sell a share of it, the partnership is dissolved and you have to start a new business. So partnership, that's one of the disadvantages in addition to liability. And then I'm going to skip down to corporation. A corporation is unique out of all these things because a corporation is a legal entity. It has its own identity from a legal standpoint. So a corporation is the only form of business here that files its own tax return, okay? Because a corporation is a legal entity. And the advantage to that is as an investor in a corporation, you are limited, the amount of your loss is limited to what you have invested in the business. You can't lose more than what you've invested unless there's criminal activity, and then that's something different. But in a normal course of business with a corporation, you can only lose up to the amount of your investment. Okay. Now, the disadvantage for a corporation is, the huge disadvantage is double taxation. A corporation is double taxed. Let me back up to proprietorship, tell you how taxes work. If I'm a sole proprietor, my business doesn't have its own existence. It's a Schedule C. It has its own set of books, and it has its own checking account and things like that. But legally, it's not a separate business, so it's not a separate legal entity. So the sole proprietorship, to do my taxes, I file a Schedule C, and Schedule C is on my personal tax return, and I pay personal taxes on the business's income. Okay, so that's a proprietorship. A partnership. A partnership is not a legal entity either, so it does not file its own tax return. It has a tax return, but it doesn't pay taxes. Basically, a partnership files a tax return that says, here's our income, and it's kind of an informational thing. So then all the partners get the partnership tax return, and then they take their share of the partnership income and pay taxes on it on their personal income. Okay, on their personal return. So proprietorship and partnership don't pay taxes as the business. They're done on a personal level, and they're done one time. A corporation, however, is a legal entity and files its own tax return. So a corporation is going to earn money, hopefully, and then it's going to pay tax on its income. So the corporation pays its tax. Okay, so there's that. But then you, as an investor or owner of the corporation, to get money out of the corporation pays you dividends. Okay, that's how you're paid. So you pay dividends. When the corporation pays you dividends, you, as the owner, have to report those dividends on your tax return. So you are paying tax on the personal level on your dividends, but the corporation already paid tax on its corporation tax return. So that's what's known as double taxation. So that's what gave way to that third category, where I skipped limited liability corporation and limited liability partnership. Limited liability companies and limited liability partnerships are kind of like some of proprietorship, some of partnership, or some of corporation. Limited liability, like the name says, limits the liability to the amount invested so that people can't get your personal assets, but it retains the tax advantages of proprietorship and partnership. So an LLC or an LLP are going to retain the tax benefits of a proprietorship and partnership, but will limit liability. So that's where we get to that. So those are kind of a basic overview of the forms of business. And you'll see more in the video lecture, a lot more detail. So what we're going to do right now is we are going to do one of the homework problems. I think there's 3 homework problems this week. There's no computations this week. This week's homework will go very rapidly. So, and if you want to play along online, you can. First of all, it says, drivers wanted to incorporate needs funds, and the president's asked you to consider investing in the business. So you're thinking about investing in the business, and we have to answer these questions. So the part I have circled, what forms of organization will enable the owners of drivers wanted to limit the risk of loss to the amounts they have invested in the business? So the answer choices are A for sole proprietorship, B for partnership, or C for LLP, LLC, and corporation. So we're on part A, the circled thing, and our answer choices. So what do you? Okay. No, that's okay. We have to have some ones that are pretty straightforward. If they're all really hard, that would be demotivating, right? Okay. Okay. So, and we got the answer. Did you get online? Were you polling? Okay, yeah, you do have quite a bit of chat going. So, okay. So, what forms of organization limit your risk with limited liability, limited partnership, or corporation? So it's talking about the owners of the company can limit their liability that way. Okay, now moving down to the next one below. B, what form of business organization will give the president the most freedom to manage the business as he wishes? A, sole proprietorship. Yes, absolutely. Okay. So sole proprietorship gives you the ultimate flexibility because you don't report to another partner, you don't report to shareholders, you can do what you want, so you've got a lot of flexibility there. Okay, and then we come down to the third question. Now this one I'm going to walk around and solicit answers here. So for C, what form of organization will give creditors the maximum protection in the event that Drivers Wanted fails and cannot pay its debt? So keep in mind it's asking what form of business organization gives creditors the maximum protection, okay, in case of bankruptcy.
Partnership or proprietorship, wouldn't it be?
Give me one answer.
Proprietorship.
Proprietorship, A. Okay, what do you think? Partnership, okay. C. Okay.
C.
C. Partnership. Proprietorship. Okay, big mouthful here. C. Okay. B. Partnership. Okay. C. Okay. B. A. B. Why did you say B? Oh, because it hasn't been chosen. Yeah, nice strategy. Brian, do you have answers online? Why don't you talk into your mic so everyone can hear you? Oh, okay. Well, next time. Okay, that's fine. Okay, so what do you have? Mostly B and C. Okay. The answer for this one is B for partnership, and the reason it's B for partnership is we're talking about creditors. Well, creditors can go after personal assets of sole proprietorships. Great, okay? But there's only one person. If we have a partnership, we can go after the personal assets of every single partner. So there's more pockets to pick with partnership. LLP, LLC, and corporation limit liability to what they have invested. So that is not maximum protection for creditors. Creditors want access to personal assets, believe me. Okay, so that's the first homework exercise. So that was not bad. And again, this week we don't have any number homework, we just have conceptual. So next we're going to do a question. This is a question that could very well show up on your attendance quiz 2. In which form of business ownership are the owners of a business legally distinct from the business? And I want to emphasize the word legally. So we're asking this from the legal standpoint. Yeah. What do you think?
I'm going to go with all of them.
All of them? Okay. Okay. A? Okay. Okay. A? 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 Okay. I'm getting a lot of A's. What about you, Brian? A's? Okay. And the answer is actually A. And the emphasis here, we're going to have one that's a little bit different coming up. But the emphasis here is on legally distinct. From a legal standpoint, the only form of business where the owners are legally distinct from the business is corporation. You have to incorporate to have a legally distinct business. And that's from the legal standpoint, which is not the same as an accounting standpoint. So from a legal standpoint only, the corporation is the only one where we're legally distinct from the business. The business has its own legal entity. Okay, so now what we're going to do is we're going to skip to the next topic, and the next topic lists several assumptions and principles that accounting is based on. All accounting follows these principles. So, and again, this is pages 8 and 9 in your textbook, and you will These govern everything, and in particular situations some come into play. You don't pick and choose. These are all rules that we follow. Okay, and again, in the video lectures I talk a lot more about these, so I'm just going to hit some high points here because we have to do a homework problem on this. Okay, the first one is an entity assumption. And now keep in mind that we are talking about from an accounting standpoint, not from a legal standpoint. Okay? From an accounting standpoint, every business is its own entity. So if I'm the sole proprietor and I have a business, my business has is its own entity, and then I'm my own entity, and I don't intermingle the accounting for the two. They're separate. Also, if I'm a corporation and I have multiple branches, like Amazon owns Zappos, right? Zappos is its own entity because it's a separate entity, even though Amazon owns it. So the entity principle says we're going to do the accounting for each business or each entity separately. It's not based on a legal entity. It's based on the business. Okay, the next one down is continuity assumption, and this one just says that we're not in danger of going bankrupt. We don't think this business is going out of business anytime in the foreseeable future. I think we call it going concern is the actual technical term. So with continuity assumption, we are saying that this business is going to continue into the foreseeable future. If we would violate this, if the business is about ready to go belly up, there's a whole different set of accounting rules that apply. So we have to make this assumption that the business is ongoing. So in Blockbuster Video, right before they declared bankruptcy and you knew that they were going under, then they would no longer use regular accounting principles because they're subject to something else. So we make the assumption that the business is a going concern or going to continue. The third category is historical cost principle. The historical cost principle says that we account for things at what we originally paid for them. So if we bought a building 5 years ago for $50,000 and it's worth $75,000 today, it's still on our books at $50,000. The historical cost principle says, boy, what you paid for something, we can verify what you paid for it because we have a receipt, bill of sale, we have a credit card, we have a check, something, so that we can verify that. And it's also not biased. We know what that amount is. We're not guessing what it's worth. So historical costs, we typically account for things at their historical cost. And then finally, stable monetary unit assumption. Basically, we're assuming that we don't have triple-digit inflation. Okay, that inflation's not going crazy, that it's okay for us to just keep accounting for it in dollars. We do not factor inflation into any accounting. Okay, if inflation were to be an issue, then we're going to have to address it. But in normal life, even though inflation, we might have an inflation rate of 2% a year, we don't reflect inflation in our books. Okay. So with that basic intro to assumptions and principles, we're going to do another homework problem. And this one goes pretty quickly too. This one says, of these the entity assumption, historical cost principle, and stable monetary assumption, for each of these four cases, which one is in play here? So either which one's being violated or which one should be followed. And again, I'm going to do these. Wendy's, the restaurant chain, sold a store location to Burger King. How can Wendy's determine the sale price of the store? What's going to provide guidance for them to do this? And the answer for that is that's governed by the historical cost principle. So we are using the historical cost principle to govern how they determine what was the amount received from the sales. So then the next one down, inflation's been around 5.5% for some time. Lake Carolina Realtors is considering measuring its land values in inflation-adjusted amounts. That one, if they start measuring in inflation-adjusted amounts, they would violate the stable monetary assumption. So we do not adjust for inflation, but the principle that's in play here is a stable monetary assumption. So the answer for B is stable monetary assumption. Okay, situation C. General Motors wants to determine which division of the company, Chevrolet or GMC, is more profitable. So they're trying to determine which business is more profitable. That is a case of entity assumption in place. General Motors owns Chevrolet, General Motors owns GMC, but they use the entity assumption to account for each of those separately. And they account for each of those separately so they know which one's more profitable and what's going on. It's one of the controls they have. So that's the entity assumption in play for Part C. And then finally, the last one, D, you get an especially good buy on a computer paying only $500 when it normally costs $1,200. What's your accounting value for this computer? The principle that's in play here is the historical cost principle. Okay? The historical cost principle is, it tells you that you're going to record that computer at $500 even though it's worth $1,200. You're going to record it at its historical cost. Okay, so that does it for that homework problem. So we only have one more. So the homework this week won't be bad. Okay, now we have a true-false question. And again, this question can show up in the attendance quiz. Now, from an accounting standpoint, the business records of a sole proprietorship should include the proprietor's personal finances. True or false? You can answer in the window. Are you set up for that? True, false?
I thought you meant like in the chat window.
No, not in the chat window, no. Brian gets a little excited when people overflow the chat window. So answer, do the polling. I'm going to start over here. Business records of a sole proprietorship should include the proprietor's personal finances. True or false? False. What do you think? False. False. Might be false. Okay. But you've got a lot of opinion over here. Okay. False. False. What do you have? You have a split. 44-42. What are you saying? False. I have no one in here. Wow. So clearly you're falling down on the job in the chat window there. Okay. Okay. So this answer is indeed false. From an accounting standpoint, the entity assumption says these are separate. So we keep separate records. Personal records are separate from the business records. So that one is indeed false. Okay. That's fine. Okay, we have another question here. The historical cost. So what about historical cost? Is it A, determined for each asset on a yearly basis? Is it B, equal to the amount of cash paid less the dollar value of all non-cash consideration given in exchange? What a mouthful. C, is a verifiable measure that's relatively free from bias? Or D, is the amount the business could sell the asset for? I'm going to wait a minute, then I'm going to come around and ask. You look like you have an answer. Not yet? Okay. How about you guys? D? You all said D? Is he speaking for you?
Yeah.
I wouldn't let him speak for you, just an FYI. Can you pick a different one?
I have no idea.
Okay, well let me keep looking. What do you think? We've eliminated D, okay? Okay. You'd say C, okay? Okay. Have you thought about it? Okay. Well, in this case, group sync is good. Okay. How are you online? Oh, nice. Okay, so you should hear me online, right? We temporarily lost the Wi-Fi signal. Everyone okay in the chat window? Can you tell, Brian? Can you scroll down so we can see what's going on? Okay, we did nothing. We did nothing while you couldn't see anything. My computer lost its Wi-Fi signal temporarily, but yeah, we don't have the video feed on yet. We just did one thing at a time. So, what? Yeah, just because we didn't do that, we're worried about audio. Okay, you did not miss anything. When that happens, it's just the Wi-Fi signal dropped on my computer for a minute. Okay, and now I'm going to fall on my butt right on the tape. Okay, so anyways, historical cost is a verifiable measure that's relatively free from bias. Okay? Okay. Okay, now we have another question. This one's an interesting one. We have a CEO of ABC Company owns a vacation home in Hawaii. ABC owns a factory in Detroit where they're headquartered. Which of the following properties is considered an asset of the business? Only the vacation home in Hawaii, only the factory in Detroit, both of them, or neither one? So make your choice. I'll be around to ask. What do you think?
Factory in Detroit, B.
Only the factory in Detroit, B? You are correct. Good, good. Yes, only the factory in Detroit is considered an asset of the business. It doesn't matter if it's a corporation or not. We're talking about the entity and the entity principle here because we are talking about accounting now. Which one is an asset? When we talk about the asset of the business, we're talking accounting terms. The business entity owns the factory. The personal entity owns the vacation home. So only the factory in Detroit is owned an asset of the business. Okay, so now we're going to do, again, we're going to a third concept, and you'll see a lot more of this in the video. And on these slides, what you're going to see, you may not see the bottom of it, it's not really relevant. We're going to talk about assets. We just mentioned assets. What are assets? Assets are things that I own. And I'm going to talk about this from a personal standpoint and then transfer over to a business standpoint. So let's say I own a house and I paid $100,000 for it. And I own a car and I paid $5,000 for it. And I have cash and I paid $1,000. I have $1,000 of cash. So in total, I have total assets of $106,000. Those are all things that I own, and they have future economic value to me, technically speaking. So those are my assets. Now we look at liabilities, and liabilities are what I owe. And this slide does not show up on here, and it's not relevant at the bottom. Don't worry about it if you can't see it, because you'll see it on the video lecture. But what I owe a mortgage and I owe a car loan. So I owe $60,000 on my house. I owe $63,000 on my car loan. Okay. And so, yeah, I'm a pirate without an eye. That's pretty cool. Cool. Yeah, you can see obviously I must have deleted something at some point. That's pretty funny. Okay. So, anyways, my total liabilities are 63,000. Are 63,000. My mortgage plus my car loan. Okay. Yeah. Okay. So now, when we say what's my net worth is going to be the assets that I own minus the liabilities I owe gives me this thing called net worth. So when we talk about somebody's net worth, it's the difference between what they own and what they owe. So this makes sense, this whole idea of net worth. And this, when I'm talking here, this is on a personal basis, and this is just what we talk about. You see in the press that so-and-so has a net worth of $5 billion or whatever. How they're calculating an individual's net worth are what they own less what they owe gives them net worth. And that's a pretty standard concept. So when we talk about it from an accounting standpoint or business standpoint, we use some of those same words. We have assets are what we own, liabilities are what we owe, and then that new term, the difference between the two, is called equity. Okay? Equity, when we talk about equity in a business, it's like an individual's net worth, but we don't call it net worth. We call it equity. Okay, so we have assets what we own, liabilities what we owe. The difference between the two are equity. So equity is like an individual's net worth, but in a business terminology, it's called equity. Now, we can call that owner's equity. We can call it stockholders' equity. We can just call it equity, and we mean the same thing. So we have equity, which is kind of like net worth, but net worth is just a common term that isn't an accounting term per se. I just wanted to illustrate with an individual, if you calculate an individual's net worth, that's the same as a business's equity. Now, we have something called an accounting equation. If I'm talking about a person, the accounting equation, yeah, both eyes, yes. The accounting equation for a person would be my assets equal my liabilities plus my net worth. And what that's telling us is my house, my car, and my cash had to either come from what I borrowed or what I've accumulated over time, my earnings over time, my earnings to date. So that's this equation here you don't need. This is kind of like illustrating where we're going with the next slide. So I'm going to go to the next slide and know that the next one's the big one. This next slide here is what we're going to use probably every single week of the semester. This is the big takeaway this week, accounting equation. Accounting equation says that your assets have to equal your liabilities plus your equity. Every single asset you have has to have come from liabilities, borrowing, or this accumulated earnings to date. That's it. So assets equal liabilities plus equity. Now, I can turn that around algebraically. I can say that my assets minus my liabilities equal my equity. My assets minus my equity equal my liabilities. So I can rearrange that equation. But this is the accounting equation. This is the biggie. You're going to see it over and over and over. You'll see it in the video lectures. So that's our accounting equation. You'll hear about it again and again. So next, we have a question coming up related to that accounting equation. Okay, the owner's equity of any business, remember owner's equity, stockholder's equity, or equity all mean the same thing to us right now. The owner's equity of any business is its what? A, revenues minus expenses, B, assets minus liabilities, C, assets plus liabilities, or D, paid-in capital plus assets. What do you say? C? B? What do you say?
C.
C? Okay. Okay. B? Okay. B? Oh. Okay, it is indeed B. Okay, it's assets minus liabilities. So if you have assets equal liabilities plus equity, how do you rearrange that to solve for any terms? So we're going to do a lot more manipulation of that accounting equation as we go forward. So owner's equity of any business is its assets minus liabilities. That's just rearranging the accounting equation. Okay, so next we're going to do the third homework problem. The third homework problem is S1-8. Now, S1-8, I'm actually going to do, I'm going to start clicking ahead on answers. So it might not coordinate with when the answers appear, but I'm going to talk about them. So we have items A through L, and we have to identify whether something's an asset, a liability, or stockholders' equity. So we're going to have an A, an L, or an S. So the first thing, accounts payable. Accounts payable is a liability. Whenever you see the word payable, that's a pretty good clue that that's a liability. Okay, B, common stock, and again, the letters appearing are not timed to my voice. So now I'm on item B, common stock. When we see common stock, that's referring to stock that this business has issued of its own. So that's stockholders' equity. If this were stock in another company that it had purchased, it would be called investment. Okay, so now C, supplies. Supplies, an example of supplies is I go to Office Max and I buy 500 reams of paper that will last me the next 2 months. That's an asset because it has future economic worth to me. So assets, supply, C is assets for supplies. D for retained earnings. Retained earnings, this is a definitional thing. Retained earnings is your accumulated earnings to date less any dividends you've paid. So retained earnings is by definition part of stockholders' equity. Okay, now again, I'm just trying to get all of these displayed here. Okay, now E, land. Land is an asset. It's something we own. And prepaid expenses. Let me talk about what prepaid expenses are. Prepaid expense, let's say Progressive Insurance, when you buy car insurance from them, they give you a pretty big discount if you pay it a year in advance. So let's say I'm in a business and I pay $2,000 for automobile insurance for the year. So when I pay that in January, I'm paying that for the entire year. So that's an asset to me because it provides me future economic benefit. It provides me insurance coverage for the whole year. So that's called prepaid insurance or prepaid expense. So that's an asset. Okay, G, accounts receivable. Accounts receivable is what customers owe us. So they bought something from us and they said, we'll pay you later. That's an asset. Okay, H, item H, long-term debt. If you see debt, typically that's liability as well. Merchandise inventory. Merchandise inventory is merchandise that we're holding out for sale to others. If we're at the Gap, it's the clothing they have out on the rack. That's an asset. J, notes payable. That's a liability. It has the word payable. K, accrued expenses payable. We don't need to worry about what accrued expenses are, but the fact it has payable, that's a liability. And then finally, equipment. Equipment is equipment we own. So this would be if we have computer systems, we have display racks, whatever. Those are equipment and those are assets to us. So that would be that. Okay, we have another question coming up that could be on the attendance quiz. This question coming up gives us how we have to select of the options that are going to be presented to you. Pick the one that has both liabilities. Examples of liabilities include what? A, accounts payable and accounts receivable. B, accounts payable and land. C, investments and owner's equity. Or D, accounts payable and long-term debt. Okay. Okay, you know this one? Okay. D, accounts payable, long-term debt. What do you think? D? You're thinking he's pretty good at this? Okay. What? Great. Okay, good. Yes, you are absolutely right. It is D. The answer is accounts payable and long-term debt. Those are both liabilities. Good job. In answer A, accounts payable is a liability, but accounts receivable is an asset. In answer B, what did you have online, Brian? Sorry. You had D online. Okay, you just wanted to say that, right? Okay, good. Okay, great. Okay, and we'll do a lot more of it on Tuesday next week. Answer B, accounts payable is a liability, but land is an asset. Answer C has no liabilities. Investments is an asset, and owner's equity is stockholders' equity. So the answer is indeed D, accounts payable and long-term debt. Okay, now we're going to get to this part of the day where I ask you, first of all, for questions, but I'm going to review what's due. Okay, so this is really important. First of all, you need to buy the book in My Accounting Lab. Do you have to have if your package is back ordered? No. You can get 17 days of free temporary access to My Accounting Lab. Follow the registration instructions that are on Blackboard. It's the second item down under course information, I believe. It's called Textbook and My Accounting Lab Registration Instructions. You can do that, and then also in that same list there, it tells you how to get the first 2 chapters in PDF format. Okay, so you need My Accounting Lab. All of these assignments that you actually do are in My Accounting Lab. Okay, so Saturday, what's due Saturday? And remember, this is Saturday, 11:59 p.m. We have homework, Chapter 1, Part 1 homework. You should absolutely get 100% on this homework. If you don't, you're probably going to get a harassing email from me, okay? Because you should. This is the easiest homework you'll have all semester. Remember, your exams in here, most people, well, first of all, every exam I have some people get 100%, so they are absolutely doable. But the exams in here are pretty challenging for most people. This is the area where you can build up your lead. So 100% on that homework. I will harass you if you don't get 100%. Same thing with the course intro quiz. The course intro quiz is over the syllabus and what we did on Tuesday. There should be no reason to not get 100%. You have 2 attempts on each quiz in your higher attempt. If you don't get 100%, you need to refer to those things. Look them up before you answer. It only takes a few minutes. And homework, remember, you can do as many times as you want. Attendance quiz 2. When's attendance 2 quiz becomes available? For sure. Today at 5, at the latest at 5. It could become available earlier. Attendance quiz 2. Now, attendance quiz 2, I'm going to switch to over here. Attendance quiz 2 becomes available at 5 o'clock today. There should be 0 reason that you don't get 100% on it. You can look up every question. Every question in class is recorded. Class is recorded. You can open up the YouTube recording or the Collaborate recording while you're taking the quiz. There should be no reason not to get 100%. If you do not get 100% the first time, take it a second time. And again, I will be emailing you and inquiring why you didn't get 100%. These are meant to be 100%. If you do the math, you say 15% of your grade is homework. If you get 100% on that, 25% of your grade are quizzes. You can get close to 100% on that. That's equivalent to 2 whole exams. This is what you need to do. And the point of this is by getting 100%, it helps with the learning. You do the work, and that helps to prepare you for the exam. It will not guarantee 100% on the exam. There's other things to do for that. But, okay, so you have 3 things due Saturday, homework, 2 quizzes. Sunday, video quiz 3 is due. It covers the video lectures in Blackboard, but the quiz itself is in My Accounting Lab. Okay, so now I'm going to open it up. Does anyone have questions? Yes. When is attendance quiz 1 due? It's right here. It's course intro quiz 1. There's only one quiz 1. Okay? Okay? Due Saturday. Yes? What? What time are these things due? Any time Saturday by the end of the day. 11:59. So anytime Saturday Eastern time zone. Okay. Can you stop recording, please? Okay. Any other questions?